Hello traders and welcome to another video review. Today is Friday, January 12th, 2024. Let's find out what's going on the economic calendar today. Plenty of data had been released overnight. I got only medium and high importance data presented here. We got the Japanese data about the current account. We got home loans from Australia, and then we got pretty nice bunch of the Chinese data. CPI, which is decreasing, PPI, which is decreasing as well. Exports from China increased from 0.5% to 2.3%. The imports increased from minus 0.6 to 0.2%, and the overall trade balance increased from 68 billion to 75 billion pound. Dollar, of course. Now, data from the UK. GDP of the UK increased from minus 0.3 to 0.3%, beating the expectations of 0.2%. Industrial production in line with the expectations, 0.3%. Manufacturing production beats the expectations of 0.3% with the actual number of 0.4%, which is better than minus 1.2%. And the trade balance actually is shrinking to minus 14 billion pound. Now, data from the European zone, some kind of a French CPI and the Spanish CPI data. New loans from China are scheduled for release at 11 o'clock. ECB Lane will give a speech at 1:30. Then we got some data from the US. PPI producer price index number is scheduled for release at 2:30 as usual. The market participants expect a hike from 0% to 0.1%. This is the key event of today. And then we got the FOMC member Kashkari to give a speech at 4 p.m. At the end of the day, we got US Barker Hughes oil week count scheduled for release at 7 o'clock, and then we got just CTFC speculative positions release. So key event of the day, PPI data from the US, and because we got plenty of data from the Great Britain and let's say China, we will have to take a look at the Australian dollar and British pound for sure. So let's start with euro dollar as usual, and then we switch to another technical part. This is the 4-hour chart of the euro dollar. As you can see, none of this data that had been released overnight made any impression on the euro dollar. We still trading inside of this very narrow range between 1.1011 and the hammer low located at 1.0777. Momentum hovers around the level of the 50, which is the neutral level, so not much has changed here unless the PPI data will be deeply disappointing. Then of course there is a chance to resume the uptrend. If the PPI data will be better than expected, then we should see another spike to the downside. The British pound, as you can see, is hovering a little bit higher after the data had been published. We made a local high at the level of 1.2783. However, this slight technical resistance is still not quite violated. It's like a little close here, just a little bit of the rally, and then reversal lower. The momentum is strong, momentum is positive, 58 points on the RSI on the 4-hour chart. So the bulls are in charge of this market. Nevertheless, it doesn't actually looks like they really want to get the test of the swing high. The swing high is located at 1.2826, and it's still 2826, 2783. Well, it's roughly 50 something pips away from the bulls are 50 something pips away from the swing high, so there is still a little bit ground to be covered. As long as we trade above the blue trend line support, the outlook remains bullish. However, this movement here doesn't look impulsive, doesn't actually look like the market is trying to develop some sort of the bullish cycle, impulsive cycle. It most likely looks like some sort of the very nasty looking complex corrective cycle, and this movement to the upside might end up another spike to the downside soon. So please stay close, stay focused, and stay close to the market if you trade British pound. Let's take a look at the Australian dollar. because of the Chinese data. What's happened here? This is the 4-hour chart of the Australian dollar. As you can see, what do we have here is of course the swing high located at 6,874, and we still got the local swing low located here, exactly here, 6,528. The market participants retrace, I guess, the vast amount of the last wave down. So if we get our Fibonacci retracement here, we could easily see that 61% has been retraced, and the 61% is located just here. 6,660. So 61% was retraced. We got the nice hammer candlestick pattern. Just above this level, there was at least technical support. This technical support is completely violated. I mean 6,693. So right now we can still place it here, and let's say place it as the old technical support. We are hovering around this technical support. There's a 50 and 100 periods moving average, but the market is under the bearish pressure. The market cannot actually go above the level of 50 on the RSI, which means that ultimately this market will face a bearish pressure, increasing bearish pressure. And what do we have here is a very nice trend line. This is what I wanted to show you guys. This is a very nice trend line resistance on the 4-hour chart of the Australian dollar, and as long as we trade below this trend line, the outlook remains bearish. Potentially we can even break below this black line. Let me do this black dashed line, so you know that this is the 61% Fibonacci retracement. We can break below the local lows made after the bullish hammer, 6,643, and then of course there isn't much to the downside. To be honest, there isn't much except the level of 6,623. Actually this level might be violated very easily. It hasn't been tested yet after this breakout, but it might get violated very easily. And then of course the last target is the very important swing low located at 6,528. So that's the outlook for the Australian dollar. Let's take a look at the New Zealand dollar. The New Zealand dollar looks very familiar to the Australian dollar, to be honest, on the 4-hour chart at least. There is some kind of a uptrend in the background as well. We got this hammer pattern. If we place our Fibonacci retracement, we can clearly see okay, there's always this kind of a movement needs to be done here. The 68% again has been retraced. So 61, the biggest one, is here. Let me put it back to black. Okay, so this is 61% Fibonacci retracement already done. The local low was made as well at the level of 6,176. So that's the technical support. And as you can see, the market is hovering here. We can even place the same trend line, I guess, because those markets are very, very similar. Actually, the market of the New Zealand dollar is trading a little bit away from the current trend line resistance, and we can place some sort of you can see this zone here. The supply zone located between 6,261 and the spike high from the January 4th, 6,280, and this zone puts a pressure on the market participants. Let me just indicate it even more clearly. So we need a breakout above this zone and above the trend line in order to continue the upside movement. Key technical resistance 6,364. This is the key technical resistance, and the key technical, of course, support is 6,079 79 pips. So this is how the range is being located on the 4-hour chart of the Australian dollar. Not much we can do right now here on the New Zealand dollar. 50 and 100 periods moving averages on the New Zealand dollar are very, very close to each other. Momentum momentum is barely above the level of 53 points only, and as you can see, it's struggling to get higher above the level of 50. The bears are still in charge of this market, and every time the market tries to go up, especially above the supply zone, it's being pushed lower and pushed lower. Of course, if we break below the 6,176 pips, the next target is the swing low. So the outlook for the New Zealand dollar together with the Australian dollar both remain rather bearish, skewed to the downside. Last but not least, the Bitcoin. Why we speak about the Bitcoin? The reason is very simple. On the Bitcoin, you can see that the next target I have indicated for you guys many times, $48,200, which is the swing high back from 2022, has been violated. The new local high, swing high, and the new yearly high has been made at 49,126. So this is still not $50,000 psychological target. Let me just indicate this $50,000 psychological target. So this is very important level for everyone. Let me just take a look if I can make it right on the 50,000 somewhere around here. Okay. But you know what I mean, yeah. $50,000 is the level, psychological level. And what's happened on the 4-hour chart? We can see four pin bar reversal candle here. The pin bar reversal candle with a very long upper pin bar shadow, and then we got the confirmation to the downside. If we break below this trend line support, there is a first indication that we have a top on the Bitcoin, short-term top on the Bitcoin. Any breakout below, let me add just one more level here, any breakout below this zone of the three green lines, 43,335 is the lowest green line. Any breakout below would eventually mean that the top is in, and we start some sort of the technical correction or a deeper pullback. Momentum is already hitting the level of 50, coming off the positive zone towards the negative zone. So please keep an eye on any breakout to the downside, as the bears are in charge of the Bitcoin in the short term for now. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.